Has the company lost its way, or is this just an emotional market aftershock from January? John Fort is here to weigh in. John.
Facebook is fine. I mean, yeah, this was a bad earnings report. Don't get me wrong. It stank. Revenue and earnings both came up short. Worldwide users dropped. And Facebook looks like the awkward parent trying to learn the new dance the kids are doing with its Reels product, copying TikTok. But don't forget, this is what Facebook does. This spring is the 10-year anniversary of the IPO. Remember, a month before the IPO, Zuckerberg bought this little fringe app for photos, Instagram, for $1 billion. And the ding on Facebook was it didn't get mobile and would be left behind. Well, Facebook figured it out, and fast. Similar story with messaging and short-form video. Facebook figured it out. Here's a common trap with the market. Sometimes when we get a surprise stock move, we amplify the facts to match the move. Facebook didn't just have a bad quarter. It was disastrous. Well, here's why it wasn't. Facebook still has billions of loyal users, a rich trove of data, a core business that prints cash, a smart stable of engineers, and a young, motivated founder in control. This isn't the end of the world. It's a bad quarter during a strategic shift, Melissa.
But isn't it odd, John, that 4 months ago the company changed its name and now its core business looks kind of shaky?
Yeah, well, on the other hand, Facebook could be in serious trouble this time. I mean, hear me out. Facebook is facing some of its toughest challenges ever, but without the benefit of its usual escape tools. Google is beating Facebook in e-commerce ads because of Apple's iOS restrictions. TikTok is taking share from Facebook in video engagement. Lawmakers are both desperate to use Facebook in their re-election campaigns and to bash it as big tech run amok. And unlike the mobile transition 10 years ago or the messaging transition 8 years ago when it bought WhatsApp, Mark Zuckerberg can't buy a smart startup this time to zoom ahead. Big M&A, not an option, because right or wrong, regulators won't allow it. And that means Facebook has two choices. One, it can build experiences so amazing that consumers leave YouTube and TikTok and embrace Facebook instead. That chance. Or two, it can build a future platform beyond mobile where Apple doesn't control the flow of targeted user data. And they could call it the metaverse. I don't know which is less likely to happen, but you know what is likely: a shrinking user base, shrinking margins, and a stock under pressure, Melissa.
Yeah, those scenarios, John, spell out a wait for investors, either a wait for investors to right its core business or a wait for investors for the core business to hand the baton, the growth baton, to the metaverse.
But isn't it relatively cheap here at the same time?
When you back out the cash, yeah.
These crazy market moves. I mean, if you liked it when it was up 20%, do you like it when it's down 20% with all the same roster of players and a hungry founder, on the other hand?